So one of the most significant news to hit within the last few days that isn't really being discussed is the Janet Yellen Senate appearance. So for those of you guys that don't know who Janet Yellen is, Janet Yellen is the Treasury Secretary for the United States. In her appearance, Janet Yellen told the Senate that the government refunds for uninsured deposits will not be extended to every bank that fails, only to those that pose a risk to the financial system. So essentially, these decisions are going to be made on a case-by-case basis. And I don't know about you, but I don't really think that they're going to be favoring the little guys on that one. So hello guys and welcome back to the Scrum Investor channel. In today's video, we're going to be going over a few topics. We're going to be discussing the Janet Yellen interview. We're also going to be discussing the FDIC, the selective coverage, and whatever that means. And going forward, how this potentially has ramifications for investors and the general public alike. Now, if you haven't already done so, I want you to do me a favor. Hit that like button. Not only does it help with the algorithm, but it also lets me know that you're new to the channel and you're liking what you see. So just a quick recap on the deposit cap and the FDIC. So for beginners, FDIC stands for the Federal Deposit Insurance Corporation. It's a government agency in the United States that insures deposits in banks and savings institutions. The FDIC provides deposit insurance for up to a certain limit, which at current is $250,000 per depositor per insured bank. Now, this is very important to understand that this is per insured bank. So any financial institution, say outside like in crypto, the crypto space is not insured by the FDIC. This means that if a bank fails, the FDIC will reimburse depositors up to the insured limit for their deposit. Now, this didn't happen in the case of Silicon Valley Bank, leading everyone to wonder if this was the new norm. For all banks, being that deposits greater than 250 for Silicon Valley Bank were still insured and still were guaranteed, which normally doesn't happen. So let's discuss a little bit more what the FDIC cap means. The FDIC cap refers to the maximum amount of insured coverage provided by the FDIC for a particular depositor at a particular insured bank. It's important to note that the FDIC cap applies to each depositor, not each account. So if a depositor has multiple accounts, such as a savings, a checking, and a CD account at a particular insured bank, the FDIC cap applies to the total deposit of that depositor across all accounts and not the bank. This is why a lot of people, like myself included, make sure to hedge your accounts appropriately in accordance with FDIC protection. Now, of course, this is America, and there's always a way for the wealthy and the savvy individuals to get around this. Now, in the sense of saving time for this video, during the research that I did find that there was ways that other entities were able to navigate this and better hedge their positions when it came to having large sums of money at a bank. But I'll just sum it up by saying this. It involves getting additional insurance coverage that banks offer that basically spreads the remainder of the account balances across other banking entities. And in turn, that gives them additional FDIC coverage. Now, I hope that makes sense. Now, let me know in the comment section if it doesn't, because I'll gladly share the research that I did and make another video. All you have to do is type in the comment section, make another video explaining additional FDIC insurance, and I'll be glad to do so. But honestly, for the average person like myself, this can be done in a much simpler way, and I'll give you the example of this at the end of this video. Let's play devil's advocate for a second. Now, I'm sure there's some of you guys out there thinking, if you know that the bigger banks are well capitalized, why would you keep such a large amount of money at smaller regional banks or even deal with them at all? Well, I'll tell you, it's about relationships with banks. As a real estate investor myself, I got an advice from a mentor earlier on while I was trying to find funding for my first deal. At this point, I was predominantly banking with the big boys, the B of A's, the JP Morgans, etc. And I'm sure that's what a lot of you guys are doing too. Well, basically, he told me that the big banks, the B of A's, the JP Morgans don't deal with small deals. And when I say small, I'm talking anywhere from $1 million to about $15 to $20 million deals. His advice was, in order to increase your chance of getting funding, I needed to develop and maintain a relationship with smaller regional banks, aka a larger amount of money in them, and use them as your regular bank, payroll services, you name it. When the time comes, they'll invest in you. So now I predominantly bank small and large, but for this reason, I have a vested interest in seeing smaller banks survive. Honestly, I worry going forward though. How will the feds decide on which banks to save, which deposit accounts greater than 250,000 will be salvageable? Being that that's on a case by case basis, in my opinion, I doubt that they're going to conduct a fair, but because I make no excuses and I'm aware now of Yellen's feelings about the situation, I believe in taking necessary steps to protect your finances, no matter how small or large they are. Now, let's dive deeper into Yellen's comments. Yellen provided her perspective on the state of the American banking system, assuring the public that despite the recent failure of SVB and Signature Bank, the system remains stable and resilient. Yellen provided her perspective on the state of the American banking system, assuring the public that despite the recent failures of SVB and Signature Bank, the system remains stable, resilient. Yellen explained that the banking system is currently well capitalized, meaning that there's a sufficient reserve to absorb potential losses. Now, I want you guys to keep this in mind because we're going to dive deeper into this a little bit later on. She also emphasized that the banking system has become more resilient since the 2008 financial crisis due to an increased regulation and oversight. Yet, Yellen further reassured the public that their deposits in the banking systems are protected by FDIC. While recent failures of SVB and Signature Bank have raised concerns about the stability of the banking system, Yellen's comments suggest that these incidences are isolated, not indicative of the broader problem. SVB, which focused on serving tech startups, while Signature Bank was focused on both commercial and residential real estate lending, was unable to repay debtors, leading to its failure. Now, despite these issues, Yellen affirmed that the U.S. banking system is strong and able to withstand the challenges. A statement that I believe was made to calm the people, and not, in all honesty, I don't think everyone believed it. Now let's backtrack and discuss Yellen's point on sufficient reserves. Let's play a little game of make-believe. Let's see what happens if people lost faith in banks, and in this case, small regional banks. Well, there's a term for that, and it's called a bank run. A bank run happens when the people trying to withdraw their money all at once. This can happen when there's a lack of confidence in the banking system. For example, if there's a rumor that banks are going to fail. Normally, banks keep a fraction of the deposits made by the customers in the vault as cash. The rest of their money is invested in various assets and loans, securities, and bonds. If all customers managed to withdraw their money at once, the banks wouldn't have enough money to fulfill that request. It would lead to, you guessed it, a bank run. This causes a chain reaction in other customers to panic and rush to withdraw their money, creating a vicious cycle. If the bank runs out of cash, it would have to sell its assets at losses, leading to financial instability and ultimately the bank failing. Now, imagine this happening at several regional banks all at once. This type of scenario is what the government is trying to make sure it doesn't happen, and this is why the reassurance by Yellen is the exact event that they want to keep from stopping this cycle, because once you start the cycle, it's hard to stop. Now, if I was asked about an event like this happening, let's say 6 months ago, I would have said, no, it's almost next to impossible. But now, all I can envision is that Kevin Garnett scene where he's holding the championship in Boston and he's screaming, anything's possible. Because I think nowadays it's possible for us to see banks failing in numbers. I want you to just imagine the sheer chaos if people didn't believe that money was safe in banks. We already have the crypto gang lurking in the background, rightfully so, right? These guys have been beaten up for 2 years. They're just looking for the opportunity to show and resurface. Now, what do you guys think? Do you guys think this is a great opportunity for crypto to resurface, to make a push? Or do you think it's just not regulated enough that it's just not going to resurface? Well, regulators are closely monitoring the situation to prevent these failures from having a broader consequence on the industry. But before I give my opinion, I want to make a disclaimer. I am not a financial advisor, and this is not financial advice. This is just a financial discussion. What I think is a smart thing to do is to diversify the location of your money. For simple math, if you have $1 million in one bank, you probably want to put it in 4 different banks. Overall, Yellen's comments, I believe, were made to reassure the American public that their deposits are safe. Now, only time will tell as to what happens to other banks, and currently as Credit Suisse goes through its issues. Now, if you found this information informative, I want you to do me a favor. I want you to hit that share button, share with a friend, because I do believe that knowledge is power. And until next time, peace.